And then Rob, yes, reduce your risk in those instances where you have a lower probability setup, definitely. But yeah, again, even this one's tricky. So you've got equal highs. We know the higher time frame is bullish. This is potentially weekly highs we're at. There's a lot going for it. It's just that final part where we're not making new highs. And then the confirmation's not perfect either, not touch immediate rejection. Oh, okay, John, thanks for that. Yeah, so in case helpful, I think it's just a language thing. Where you say reduce the size, I got confused. I would say terminate. It's done. Yeah, so yes, that's a good point. You know, as soon as price enters that zone, it's terminated. It's sometimes I say mitigated. That zone's been mitigated. We're seeing price action in there. We no longer want to see price come back into that zone. That's why it's terminated. I'm trying to think of an Arnold Schwarzenegger joke there, but I couldn't think of one off the spot, so I'll just keep quiet. Right, so we've got now so this is a follow-on from one candle break. So we're coming back into recent price action. So weak demand zone. This is a weak demand zone as well. But you can see pin bar rejection and an engulfing candle. Sorry, and then you've got your entry there. It looks like a 2 to 1. As long as it's 2 to 1, that's fine. Always be careful of your stop loss as well, making sure that you give yourself a bit more room if you are going aggressive below the stop, below the wick. It then comes back into that discounted area, which again, we know is still a risky area of demand. We've got imbalance down, but we're seeing buying sentiment coming in, and then okay, we're starting to see some intent from buyers failing to make new lows. And what do we see? Touch confirmation. So it's still a riskier trade. We are going against bearish sentiment. So if in scenarios like this, reducing your risk. Again, stop loss is critical. Look at the wick. You want to give yourself a bit more room in this instance. And yeah, potentially targeting highs or 2 to 1. 2-bar balance, imbalance down. Good imbalance, coming to equal lows though, so that would be a concern. But you're right to identify that supply zone. What's the confirmation? Fourth candle engulfing, and then continuation lower. And then these are your ideal situations where you just have price making gradual new highs, you're identifying demand zones, and then breaks. And you will identify times where you've got demand zones, you don't quite come back into a demand zone, you get a small entry confirmation, and even in those instances you can potentially take them. Imbalance, small break, engulfing, move up. And again, this is just a continuation where we've got 2-bar break. I don't think it actually breaks though, so be careful there. Maybe just so what you want to see, 2-bar good, imbalance up, good, making new highs. We want to see price break away from that demand zone, come back, and then reject. We want to see price move away. It's still touching that demand zone, which is telling me, okay, maybe the intent from buyers is still not there, but equal highs, 2-bar break, touch. Now here can be a difficult scenario. You've done the right thing in terms of entry, a more longer term position. So equal highs, we actually get a confirmation candle at the close of those highs. So from that sense, it can be risky. But even here, we got 1, 2, third candle, really good pin bar rejection, but it closes inside demand zone. So good spot in terms of not actually executing there. You want to use confirmation closing above the demand zone. Done that. And then